This isn't just a chart, it's a target map, and it's pointing to exactly where $50 million in Bitcoin is sitting, ready to be liquidated. We're going to follow that map step by step.
Look at that. See that single bright yellow band? That is over $50 million in leveraged bets, all piled up at one single price, just waiting to get wiped out.
Yeah, $50.43 million to be exact. Now, when you get that much money crammed into one tiny price zone, you create this massive instability. It's basically a pocket of rocket fuel waiting for a spark.
And you gotta understand, this pileup of leverage isn't just some random market noise. No, it's a magnet. It literally pulls the price toward it, because the market is designed to hunt down and consume exactly this kind of liquidity. So the real question is, how do these giant pools of money even form? And what or who triggers the violent move that takes it all out? We're gonna break down the entire hunt from start to finish. If you find this kind of analysis valuable, go ahead and drop a like and share. So, it all begins with the slow, almost invisible buildup of leveraged positions. This is the part where the tension in the market just starts to wind up like a coiled spring, and most people don't even notice until it's way too late. All right, so let's get on the same page real quick. A liquidation level, it's simply the price where an exchange automatically and forcibly closes a trader's position. You can think of it as a circuit breaker that triggers a massive forced market order. Now, early in the day, around 1:36 a.m., you can see the board is pretty clean. The liquidation levels are all scattered, spread out. See, there's no single juicy target for the market to go after just yet. The risk is pretty evenly distributed. Make sure you subscribe to the YouTube channel so you don't miss these updates. But, that kind of calm never lasts. Over the next few hours, all those scattered positions start to clump together. They start forming these incredibly powerful zones that begin to pull on the price, like gravity. And boom, by 8 a.m., the entire picture has changed. You see those bright yellow bands? That's tens of millions of dollars in short positions, stacked up right about 92,000. And you've got another big cluster of longs just waiting below 90,000. This is pure human psychology on a massive scale. Traders all anchoring to the same round numbers, putting their stops in the same obvious places. The trap is officially set. And this gets to a core truth about how markets really work. Price doesn't just wander around randomly. It moves with purpose. It moves toward the pools of orders. It hunts for the money. And right now, all the money is trapped inside those yellow bands. So now we've got a standoff, right? We have a huge target above the current price and another huge target below. The market has to pick a victim. So which way does it go first? Follow us on Twitter for more updates as these situations develop live. Okay, here comes the main event, the cascade. This is that super fast, super aggressive price move that is specifically designed to smash into one of those liquidity pools and set off a crazy chain reaction. And there it is. On the left, you've got the setup at 8 a.m. On the right, the aftermath, just a few hours later at noon. Price just shot straight up, ripped right through that $92,000 level and completely vaporized that wall of short positions. The hunt was a success. So how does something like this happen so fast? Well, it's a domino effect. All it takes is a little push into the zone to trigger the first liquidations. Those are forced market buys, which shove the price even higher, which then triggers the next level of liquidations, and on it goes. It's an explosive, self-fueling cycle. But here's the really wild part. Check out what happens next. After wiping out all those shorts, the price drops. And in all that chaos, an even bigger pool of liquidation starts building on the other side. This is where we see that peak leverage number hit over $50 million. A new, even juicier target has just been painted on the map. If you're getting value from this, do us a favor and drop a like and share. So, after the fireworks of the cascade, the market goes into this cool-down phase. The crazy volatility dies down because the fuel for the fire, all that concentrated liquidity, it's been used up. The board gets wiped clean and the whole cycle gets ready to start all over again. And by 8:47 p.m., you can see the end result. Just look at this chart now. That massive, bright yellow band we started with, it's just gone. Completely erased. The $50 million target was hit, all that fuel was burned, and now the market is, for a little while, stable.
So let's just quickly recap the two different states of the market we saw. Before the cascade, you have high, super concentrated leverage. This creates really obvious price targets and sets the stage for insane volatility. After the cascade, leverage is low and scattered all over the place. There are no obvious targets left, and you get this brief period of temporary calm.
So the key things you absolutely have to remember from all this are simple, but they are so powerful. First, liquidity is a magnet for price. It's not the other way around. Second, big volatile moves are not random. They are very often a calculated hunt for that liquidity. And third, these heat maps are your treasure map. They show you exactly where the big money is trapped. Definitely subscribe to the YouTube channel for more breakdowns like this.
The market is always going to build these traps. It's just what it does. So the question isn't if another one of these $50 million targets is going to pop up, but where. And now that you know how to read the map, you can start to see it coming. So where do you think the next hunt is going to be? Let us know what you think. And be sure to subscribe and drop a like below. Follow us on X for more updates, and we'll see you in the next one.